Good morning, everyone, and welcome to the ioneer conference call with Executive Chairman James Calaway and Managing Director Bernard Rowe regarding the $490 million investment and strategic partnership with Sibanye-Stillwater that has been announced this morning. All attendees are in listen-only mode. If you would like to ask a question, please enter it on the Q&A panel within Zoom. I will now hand over to ioneer's Managing Director, Bernard Rowe. Bernard.
Thank you very much, Alex, and thank you, everyone. Welcome to this conference call with myself and James Calaway. Delighted to be here this morning to run through briefly in about 10 minutes just the highlights of our announcements this morning. I would refer you to our ASX announcements and presentations for full material. We're delighted that this morning we've announced a transformational 50-50 joint venture with global miner Sibanye-Stillwater to develop ioneer's Rhyolite Ridge lithium and boron project in Nevada. Sibanye-Stillwater will contribute $490 million for a 50% interest in that joint venture. Ioneer will contribute the Rhyolite Ridge South Basin project into the joint venture for that 50-50. Ioneer, importantly for us, remains the operator of the project. In addition to the investment at the joint venture level, which will be a joint venture structure at the project level, in addition to that, Sibanye-Stillwater will make a strategic investment into ioneer via a $70 million placement to fund capital development and working capital requirements. That placement will be done at a 10-day VWAP to yesterday's closing price. Ioneer has also agreed to provide Sibanye-Stillwater with an option on our North Basin project, which is not included in the joint venture. Under that arrangement, Sibanye-Stillwater can elect to add the South North Basin into the joint venture in return for an additional $50 million US investment. Importantly, in addition to those key investment factors or characteristics, Sibanye and ioneer will work jointly together through the joint venture to secure the debt financing for the project on acceptable terms to ensure the project is adequately funded through to full production. So we're talking about both a solution here for the equity component of the project and then working collaboratively on the debt financing, which will then combine the two will cover the full investment required for the capex of the Rhyolite Ridge project. But this transaction for ioneer, and I think also I can say for Sibanye, is more than just a financial investment, far more in fact. And to explain that, just a few words on who Sibanye-Stillwater are and what additional benefits they bring other than in addition to their financial attributes. So Sibanye-Stillwater is a $10 billion company. It's listed on the New York Stock Exchange and the Johannesburg Stock Exchange. It's one of the world's largest platinum group metal producers, and it's also globally one of the largest gold producers in the world. It has a very strong balance sheet and is well capitalized. So from a financial perspective, an ideal partner. It has a proven track record in developing and operating large-scale mining projects. Importantly for ioneer, that includes within the United States. They have 3 integrated platinum group metal facilities operating in the state of Montana in the US. They have deep relationships with the automakers. As the world's largest supplier of platinum group metals, then they supply to most of the global car companies in various areas, including the catalytic converters. So they've got deep relationships there. 2 years ago now, Sibanye-Stillwater announced to the public that they were undertaking a global diversification strategy to encompass battery metals and green metals and diversify geographically as well. So ioneer is a great fit on both those fronts. Sibanye-Stillwater has first-class ESG credentials and are very well aligned with the values that our ioneer and ioneer's board has put in place as we've developed this young company. So again, full alignment there. And ioneer will draw on the expertise in this area from Sibanye-Stillwater as we grow from a small company into a large lithium and boron producer. So these are the attributes combined with the financial strength of Sibanye-Stillwater that make them a perfect partner for ioneer. So what does this mean for ioneer going forward? So, if we just look at some of the key areas, it's a transformational strategic investment that highlights the quality of the Rhyolite Ridge project, something that we've spent 5 years and in excess of $100 million demonstrating that success. So it's a fantastic result to achieve a milestone like this. And what it really does is it underpins ioneer's future as a major lithium and boron producer in the United States. It accounts for all of the equity required to build the project. And as I've previously explained, the balance, which will be debt, will be jointly put in place by the two partners. And overall, a full funding package solution is what this transaction means for ioneer and the Rhyolite Ridge project. That, without doubt, makes Rhyolite Ridge the most advanced lithium development project in the United States. So we're very delighted about that key milestone. Sibanye-Stillwater adds a very high quality aspect to the team that we've already been putting together, as you would have seen particularly over the last 6 months, but going back, companies like Fluor, SNC-Lavalin, Veolia, DuPont, FL Schmidt, Caterpillar, Golder, leading names in the industry for a tier 1 global project. And, Sibanye-Stillwater fits perfectly in there, aligning with ioneer and the rest of its team. We're well positioned with this transaction. We're very well positioned to commence construction in the second half of 2022, subject to final permitting, with construction to start late next year. 2 years of build, meaning we would be first production of lithium and boron chemicals in the latter part of 2024. And with that, I'm going to hand over to James Calaway, the Executive Chairman, for a few words.
Thank you, Bernard. I of course echo all the things that you've said. I would just add a few things. One is a very timely investment for us. We've reached a very high state of maturity in our engineering, as we've kept you well informed. This basically checks off, as Bernard said, the financing issue, and it really just leaves one thing left to be finished, and that is to get the final permit that we need. We've already received the 2 state permits that are very important and very difficult to get. We are working very effectively with the Fish and Wildlife Service and with the BLM on addressing the concerns about the plant, the Team Buckwood plant. And I think that we've come to some very good understandings through our scientific work and our collaboration. And we have high confidence that we will be able to have a excellent result for the plants as well as for our operations. That the idea that they cannot coexist is simply, you would have to defy science to say that at this point. So we're very, very confident about this, and we're having a good working relationship. I think the other thing I'd say, from just back to the financing itself, one of the things that we've worked very hard to do is to keep a simple capital structure. A lot of young companies get tripped up by very sophisticated financial instruments that work fine for the shareholders as long as everything goes perfect. But if there's any hiccups, it goes very badly for the shareholders. And we've had many discussions like that over the last 18 months, but we've refused to engage in those conversations. That's the easy way out. But what we have here is the simplest of all things. It's all common equity at the project level. So when you look at this, you can know what we own and what they own, and you can understand the structure. We can understand the structure, and we can work very effectively with Sibanye to deliver this project under that. We don't have to be geniuses to understand what we've done. And I am very proud about that. It took a lot of time and a lot of effort and patience. And the other thing I'd just say about what we've done is there were a lot of pressure on us in last year saying, why aren't you doing this financing? Why aren't you closing your deals? And we kept saying, well, we want to have the right time. We want to have the right deal. And we want to continue with our engineering work all through that time, which we've done. And so now what we have is we have a very easy to understand, very simple capital structure that does not require perfection to maintain the value to our company. We are very close to completing our engineering. You can see, in fact, behind Bernard's head there on the screen is that's actually the latest actual engineering rendering from Fluor of our entire plant operations. We're reaching a very mature state. We have a fantastic team of people around us, and we're determined to deliver for our shareholders as we promised you. So thank you for that opportunity to speak, Bernard.
Thank you, James. And I'll hand back to Alex to take some questions for either James or myself.
Okay, thanks, gents, and congratulations on what's clearly a transformative deal for the company. Just one question. You touched on it there, but there's the timeline to development. That's this I assume has probably accelerated that. You're able to really put your foot on the gas now and move forwards towards production.
Yes, we are. So if we look at the sort of the three key elements to being ready for construction, there's the engineering, which we're well and truly on track. And as James mentioned, we had a strategy in place to push forward with that with confidence, preparing for that. So engineering, we'll tick the box and we'll have the engineering complete, ready for shovel-ready construction. The second is the financing element. So obviously, this announcement today really puts that to bed. And yes, we have still got the debt discussions to close off on at the appropriate time. But we've been working hard in the background with Goldman Sachs, our advisors, on those debt discussions for well over 12 months. So we're well prepared there. And then the third thing is obviously the permits, as James said. 2 out of the 3 key permits we've already got. We're expecting the final one, the federal permit, in the second half of next year. So yeah, all those things are going to come together, and the main one that's obviously key for us is the final permit.
There's a few more questions coming in from Jackie. When's the expiry of the North Basin option?
It's an 18-month option.
Okay. And another question, any progress on dual listing?
Yes, we've said publicly that we're working on that and we are progressing it. We'll give an update in due course, but it's it's on track. We're doing the necessary steps to allow us to do that. I think we gave an indication of the target date was before the end of the year. So we're still working towards that, and we'll give updates as appropriate, but that's still on track.
Okay, a question here from Tim. What is the expected size of the debt? And if I could just tack onto that, will the deal announced today make it easier to access that debt?
Yeah, James, do you want to take the debt one?
Yeah, I'm happy to do that. Well, we're, obviously in Q1, we'll have a final, very high detailed estimate of the final cost. That will, of course, inform the amount of debt that's necessary. But what we can say with a very high level of confidence is that the debt equity ratio is going to be conservative because of the scale of the equity that's been put here today. So we're not going to have a highly leveraged project. I think that the best guidance we would give is it's going to probably be somewhere between 40 and 50% debt, something along those lines. But you have to look at it. Also, you want to have enough working capital and other things for the project. So I think we're well capitalized. I think the debt's going to be very appreciative of the simplicity and the scale of the equity.
There's another question on the same theme through here from Peter. He says, how was the price determined? The investment will be US 490 for 50% of the JV, whilst the market cap of ioneer is Australian 1.4 billion.
I'll start, but James probably wants to say something here too, is that, this agreement today, funds or is a solution for the total funding of the project. It's not just about, you know, what the capital markets are doing today based on spot prices of lithium, which without doubt have been very, very bullish lately. So that's the important thing here. We're putting in place the key elements that are required to actually build this project when it gets permitted, which we're expecting in the second half of next year. And that's what's important for us. And on top of that, as I outlined before, you know, Sibanye brings a lot more than just the 490 plus the 70 million placement plus a 50 million in potential investment via the North Basin. It brings the synergies that ioneer requires, and comes as a great advantage to us to have a partner who brings those synergies to the table. The relationships with the auto companies, the ESG development around their ideas and implementation of ESG matters. You know, their operational experience, which, as I said, includes a number of facilities in the United States. So this package is about solving the total question around how do we finance and build this project.
I don't have anything to add to that, Bernard.
Yeah.
The one question here from Josh regarding offtake agreements. How much interest is there for offtake agreements, and even can you discuss anything about who you may be in, you know, who may be a potential target here? And if I can tack one onto that as well, just if you can give general commentary on what you're seeing in the lithium market currently.
You want to do that one, or you want me to do it, Bernard?
No, you do the offtakes.
Okay. So as you all well know, we executed our offtakes for the boron well over a year ago, and those are all just we're working on developing strategies with our partners to, you know, for the delivery and of those materials. But that's done. The focus was on lithium. We felt last year was not a great time to be negotiating deals. We were right. We had a lot of ongoing long conversations, but we weren't prepared to negotiate significant offtake agreements in a bad environment. I think that played off well. We've, as I think everyone knows, we've done our first offtake with EcoPro, one of the largest Korean makers of cathodes. And I can say with we have many discussions underway, many inbound interest in our materials. Our issue at this point, quite frankly, is not can we put all our material away in an offtake. That's not the issue. The real issue is we're wanting to make sure that the people we're putting it to are outstanding offtake partners, and where they are focused on the development of capacity in the United States. Right now, the United States doesn't have significant cathode or battery material making facilities. But what we're focusing on are doing deals with companies that have the strong intent and plans to do that, and so that we can transition our materials into the United States more. So that's where we are. But the issue of getting them done, I suspect we'll have another offtake to announce here in the next quarter or so or two, and that'll probably be most of what we want to put into an offtake anyway. We will definitely not want to have full capacity in an offtake. But that has really become not such a big concern. There's actually on the markets, you know, there's a you can see it in the prices, but you can also hear it in the voice of the people that are calling. There's a real sense of a potential shortage looming, and one of the things that's so important about our project and potential economics of it is that we have a chance here, a very good chance of being one of the early new big pieces of production that come on, and certainly will be the first one to come on in the United States. So, you know, that's an enviable position, and I think people are beginning to wake up and realize that's the case.
You're on mute, Alex.
Thanks, gents. Do you have time for one more, or do you?
One more. Yes.
Okay. So there's a few here, and we might need to respond to them directly afterwards. But the last one, the latest developments in environmental permitting across the US, including Thacker Pass, any concern over the Rhyolite Ridge development?
Bernard, you're the expert.
Yeah, no, then there's no concerns. You know, we've again, we've been working on this project for 5 years and have done $100 million worth of work. The environmental baseline studies were completed a long time ago, you know, a year and a half ago now. You know, we're very aware of any sensitive matters on the project, and obviously the team's buckwheat that James referred to is the main one there. And we've had a very good strategy around how to manage that, how the two can coexist, minimising impact and mitigating for any impact that we do have. We've done a lot of scientific research, us and others have, that support what we're proposing there. So, you know, no, we think that, you know, this project will go through the permitting process, and we're not concerned about any other issues that are relating to other projects. They're not particularly relevant to us.
Okay, well, we'll leave it there. Thank you so much for your time this morning, Bernard and James. Thank you for all the questions. And for those that we haven't had time to respond, we'll look to email you back directly as soon as possible. So congrats again, gents, and I'll hand over to Bernard for closing remarks.
Yeah, thank you, Alex. I just want to thank everyone for joining the call. You know, please feel free to reach out to us for further meetings, discussions, etc. We're very happy to engage. And finally, I would just like to thank, you know, the Executive Chairman, James Calaway, who's been instrumental in getting us to this point of delivering this strategic partner, of the support of the board of ioneer, a wonderful board for a company of our size and rapidly growing, I'm pleased to say. And finally, the wonderful team, primarily based out of our office in Reno, again, a rapidly growing team, who, you know, it's their hard work that has resulted in us bringing in a strategic partner, a sophisticated strategic partner, a significant investment, and de-risking the financing elements of this project. So thanks to all of those involved.
Yes. Great.
Thank you. Thanks for everyone.
Thank you.